Hello everyone, welcome to the Ichimoku daily analysis for the US dollar Japanese yen FX for Wednesday, September the 2nd. Well, a very bearish day today, and the potential for a change of trend that we noted yesterday didn't come to fruition. We had to keep an eye on the high of the previous candle, and that certainly wasn't taken out. There was no chance of that happening yesterday. There was a potential imperfect star pattern yesterday, and that was basically because we had a small body that gapped away from a larger body candle to the downside, and there was potential. It wasn't quite a perfect pattern, but there was potential for a new first time frame uptrend to develop, and it hasn't. So the highs and lows are continuing in a first time frame downtrend, which means that we still have a lower high and a lower low on a very bearish day where the bears have closed in control, and they're showing some commitment to taking this market lower. We have, although, traded into a very strong zone of resistance, and we can see here previously when the market sold off quite substantially that around this area, around the 92 down to 91.5 level, there was substantial buying coming in, and the bulls have bought this market back from this area, and that resulted in quite a substantial uptrend. So quite very volatile trading has evolved from this area. So there is potential for that to happen. So we need to keep an eye on the short-term dynamics here when the market is trading around this region. If we see some bullishness coming in, then there is potential for a substantial retracement of this previous first time frame downtrend. Now we are trading down below the Kumo or the cloud, which means that the market is overall bearish, and we're trading down below the Tenkan-sen and the Kijun-sen, which means we have bearish signs as well. If we look at the angle of the Tenkan-sen and Kijun-sen, they're pointing down very sharply, which reflects the very strong downside momentum that this market has. So keep an eye on what happens over the next few days of trading. If we get some iffy, indecisive type candles, then there may be potential for the Tenkan-sen or Kijun-sen to turn flat, potential for the market to be telling us that it's overdone, and potential for some sort of a retracement. The market is trading a long way away from the Kijun-sen at the moment, and markets trade a bit like a rubber band where they'll move to this very strong trending phase, which is also a disequilibrium phase, and then they'll move back to equilibrium. Equilibrium in the time frames is represented by the Tenkan-sen here in a short time frame and the Kijun-sen in a longer time frame. We shouldn't preempt, though, that will happen because they are still pointing down sharply. We just need to keep an eye on the short-term dynamics and what they do over the next few days.